Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcast.
So let's, on that note, just take a quick look at the EUI, which is the U.S. versus the euro. And, you know, in this particular situation, we talked about that real significant bull run on the U.S. dollar, and we did, in fact, have a little bit of a consolidation take place. And we've been tracking this. I think if you go back to our FX weekly outlooks, we've been looking at this right back from the point that it was playing off of these, well, it'd be the all-time high on the euro here. And, you know, just to kind of pull it together with respect to support and resistance, what we're looking for is, again, that sort of consolidation of price action or that unwillingness to more or less move. In this case, it was a downtrend move on the currency pair, move to lower lows. And we can see here that as we sort of go through the price chart, we can see specific areas where the price action more or less just stalled in its attempt to continue. Well, in this case, it would have been new lows on the EUI or new highs or new lows on the U.S. dollar. Now, that area there can be characterized as being a key level of support, and the idea is that if the euro was going to continue in its strength against the U.S. dollar, or the U.S. The weakness in the U.S. dollar, we really needed to see a break below this key support level. So what that's suggesting to us is that, you know what, if we miss this key move to the downside here, we have to be cognizant of the fact that prices are starting to stall in this area, and I'm going to show you a couple of indicators that we can add to this. But the idea is that when this starts to take place, we can start to look for the potential of a potential move in the opposite direction. And again, what we would do is we would look at it. Look at it on the bigger picture, identify these sort of key levels here, and sort of get a feel for where our support and then our resistance levels are. And that way we essentially have a trading range with respect to, in this case, the price action on the EUI. If we're looking to take advantage of this, we have to recognize that as prices play into these higher highs, the potential, not necessarily a guarantee, remember we're talking about probabilities, but because it's rejected off of this level here, it's rejected off of this level here, here, and here, we have to be cognizant of the possibility that it may indeed reject off of here. So if we're looking to take advantage of this, okay, we want to see a break above this area here, which we did see take place, and then we need to go back into these previous resistance levels to identify possible targets. And as you can see here, highlighted by this oval here, our price action actually played into this resistance level, rejected back down. So there's that example of being able to sort of wait for a little bit of a retracement before getting back in, and then finally, as it broke through these levels here, continued to the upside. Now, we've actually identified this level here in our weekly outlook as being a key area of resistance, and we can now see that it's rejected off of here. But the idea is that we're really just simply using that the concept of support and resistance to make our trading decisions. Now, in saying that, if you'll notice here, that resistance level, as prices break through, now becomes our support, and to the downside, the window of possibility for this to come down and retest the support area is high, given the significance of this particular price range here. So again, previous resistance becomes support for the next move to the downside. So a simple sort of rule of thumb that you can apply when you're looking at these currency pairs as well. So, anything I need to clear up so far, Steve? Any pertinent questions right now, or shall I start moving forward?
I think the one question is again, we're getting this question, is it daily? And I think, of course, the answer is yes. Jason's already said that these are daily charts. So, just remind yourself that these are daily charts. You can obviously go to shorter periods of time using other software, but he's using daily, and that actually works perfectly well with the ISE FX options.
Yeah. I'll actually, and I'll know for next time, of course, to make sure all the charts are labeled with respect to the time frame. But the one chart that I do have, which represents a weekly chart, is actually labeled weekly. So unless you see otherwise, you're looking at a daily chart. So
thank you.
Okay. Now, we talk about the idea of sort of putting the laws of probability in our favor. Now, I'm actually hearing a little bit of a interference here, Steve. Hopefully I'm coming through clear on your end. Is it still okay on your end? Oh, Steve? Huh. Well, folks, if
yes,
you...
yeah. You're okay. I do hear it crackling for whatever reason, but I put myself on mute to see if it was me.
I think it might have been. I think it might be me, but hopefully everybody is able to hear. Despite that, we talked about putting the laws of probability in our favor and more or less likening ourselves to a forensic auditor or a forensic investigator, and how we do that is we start to put a few other things in place to help us make some even further trading decisions. Steve, I see that there's a few people getting static here. I wonder if it's maybe my line. Should I maybe?
I would try to. Can you just? It sounds like your line went bad for whatever reason, Jason.
Let me try to call back in real.
Fine, that's fine.
Some people aren't.
Fine,
so
call back in, and we'll start it over again. I'll just talking for a couple seconds.
Yeah,
okay.
Yeah. We'll leave the slide where it is, and I'll call on another line. So hang tight there.
Absolutely. Okay, guys. Remember, Jason he's really making an excellent point. You're looking at daily charts, and sometimes you're just going to be in a position where the stock, or in this case the FX pair, it completely makes a breakout or a breakdown. You, as the investor, have to decide if you want to actually use your own software package to scrutinize a shorter period of time, whatever, hourly. I don't know if you want to do it, minute by minute, but that's really up to you. But you may want to consider that. Let me see if I can get Jason back.
Yeah, I'm back online here, and I think the static is gone. That's the joy of working live with technology. You just never know what curve you're going to be thrown, but hopefully everybody can hear effectively now. How's it on your end, Steve?
Perfectly clear. I hope I was just trying to tell everyone about the challenges that you do have. As much as you learn this, that occasion, like you said, if you want to really try to get into a strong uptrend, if you were to go into an hourly chart, you would find a pullback. So that was a really good point that you had mentioned just a couple minutes ago. But yes, the sound is much clearer now. Thank you for joining us again.
Yeah, no problem. Just a quick reference. I see there's a question with respect to any examples of, I believe it's intraday trading. I do not at this point, but that's something, maybe an idea for an upcoming webinar as well. Today we're just simply focusing on the bigger picture, looking at our daily price charts and moving into our weekly for our one example. So, but that's something that we can consider moving forward. Right now, I'm going to look at applying confirming indicators to our price charts to help us again identify trend strength and weakness. So basically, when we talk about adding a confirming indicator, we're really looking at a comparison of signals to confirm our market outlook. Again, just a reference, we're really trying to build a case for a particular directional bias and then work off of that information. Now, there are literally hundreds of confirming indicators, and depending on what software you're using for your technical analysis, they could have their own proprietary approach, or it could be just some of your standard approaches. But again, the idea is that you really want to just pick a couple that you're comfortable with, and we're going to look at using our MACD and our RSI to help us sort of identify trend strength and momentum and so on and so forth. So try not to get overwhelmed by applying these lower indicators. There really is no magic bullet. It comes down to just your management of risk and so on.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.